1439. You see that? Somebody mentioned that they'll really like that bit of information coming through. You see the trade? This one here, NASDAQ, possible bond markers for a short sale on the top line of the NASDAQ. Take a look at the time, guys, 1439. 1439, guys. What happened at 1439 on the NASDAQ? Craziness, right? Crazy opportunity to trade off that 1439 high price. Take a look. So if we're getting a bond marker coming in, there's 1440 right there. You're now recognizing that 1439 is this rally here, isn't it? So in other words, you're able to top tick the NASDAQ almost perfectly from that bond marker that came in at that stage. Now, you might not like the idea of selling on the way up, but when you see the absorption starting to hold in here, you're absolutely loving it now, aren't you? Okay, so it's 3 minutes later, it's 1442, but it's still the same storyline. The storyline doesn't just change in 2 seconds flat. We get the seller coming in following the bond marker that we get from the bond pit. So when the bond guys are telling us what they're doing, the equity guys might pay attention to that. In fact, they should pay attention to it most of the time because it's powerful information. Charlie would be very aware of the fact that equities are bullish or bearish. Whatever Charlie then does, the equity guys will be very aware of whether bonds are bullish or bearish at that point. Well, if we know that there's a bond marker coming into the marketplace, and it's so crystal clear, we can't re-timestamp it. It's just trade log stuff, right? So when we see that bond marker, guess what? We start looking for it. It doesn't mean it's there immediately, right? It says possible bond markers for a short sale on the top line. So that's the kind of trade we need to start looking for, that short seller. How do we spot the short seller? We spot those absorption prints at 1441s, 1442s. So it's not a trade, it's a piece of information that leads us to a possible play coming in, doesn't it? Yeah. And then the trade takes place that gives us this massive kickoff to the downside here for thousands of dollars of profit right there. And that's not a chump change trade, by the way, guys. That went 670 to 570 in about 15 minutes. That's a $2,000 profit on that drop off of that bond marker short. Now that is one hell of a trade, guys. And it's already on your trade log. It's not there. You can all see it. If you go into your trade log, you'll be able to recognize that it is there on your trade log as much as it is on mine. It's not made up shit. It's there. You've got to find that story, though. You've got to still build around it. Maybe there's not enough buyers to show it. Maybe the buyers have gone. Well, there's plenty of buyers up here, isn't there? That's why we get absorption prints there and there. And that's why we get this brilliant sell-off at that point coming away from that price. Now, obviously, when we're looking at trades like that, we can obviously start looking at that and saying, well, how did that trade play out ultimately in terms of the trade narrative? Well, it was just a market maker control, remember. You know, we're not saying that you're going to get one of your Viper trades. You're not going to get that perfect trade setup, but it's dominated by the market maker in here, isn't it? So when that trade is dominated by the market maker here, then the obvious trade is that, well, we're not going to get what we expect to get. We were lucky to get the absorption in that crappy candle there. And then, of course, the sell-off came in because some algorithmic buyers came in here, and they were bad algorithmic buyers. And sure enough, we took advantage. They switched off the buy side very quickly, and they rolled with us on the sell side. Well, obviously, if you're first at the party, then you would have been able to sell into the blue candle there, and that could have got you into your Momo short sell into that phase, couldn't it? So it's worked out beautifully because you can see how much value we had to buy this bottom edge here using Max. I mean, that's not hidden from view, is it? That trade there is not hidden from view. That's a beautiful bit of business. And obviously, again, it's about finding the narrative. It's about building the narrative around what you're seeing. I'm looking for buys. I'm adding to my storylines. I'm trying to figure out what else is going on in here. And obviously, when we get past this narrative here, you can see the market maker is now in control of the buy side here. Well, that's good news because you want the market maker to be in control of the buy side during these pin rejections. And we start looking again into those pin rejections at 1530 to see if we can get an absorption print, get away from that price and take the market bid at 1530. Well, again, there wasn't anything very specific. There was absorption. It wasn't brilliant, but let's take a look at it anyway. It's a 1 minute, it's a 30-second chart. Okay. Well, you can see that at 1527s and 1527s there's obviously a buyer in here. And it's that buyer there that seems to provide us with that perfect level. Do you see the buyer? So what do we tell you to do when you see this buyer coming in? You mark the POC to the bottom of the candle and you mark off the area so that you know that the buyer isn't located at that price. So when you see a seller coming in here, you're obviously watching to see whether we get an absorption type print in this area. Well, the buyer comes in again and we obviously rip the price and there's a buyer at higher prices here. If you've missed the bottom edge, you might have been able to take advantage of the rip from that buyer there, which obviously is a little bit elevated. But again, it's coming off the bottom edges of the candle, and a retest into that should be bullish. And obviously, you get this very easy rip higher from that long NASDAQ position just by recognizing that absorption in that candle there. It doesn't mean you're a buyer of that candle. It means you're a buyer if it retests the low prices, because that's where the buyer was located, right? So when we retest the low prices, you're looking to buy into it. Boom. So long as there's not a seller above you. If there's a seller directly above you, you don't buy in here. There's no sellers above you here at all, is there? So you buy in here and boom, there's your trade. It's a nice winning swing away from the bottom edges again, guys. Beautiful bit of business. Again, when we're looking at these as stories, I mean, it's not about just one piece of a jigsaw, is it? It's not about looking at it saying, yep, that's got to be a buy and that's got to be a sell. There's always going to be competing stories that we have to always take into account. We're not saying that every trade is going to be picture book perfect. Very rarely are any trades picture book perfect. Just there was an example of a day where we could take screenshot after screenshot after screenshot, and everything we looked at was picture perfect. But today's sell and today's buy are just incredible, I think. If you've ever needed proof of the power of Max, this is a great example today, is it not? And obviously, you're just building around the story. The idea of diverging stories, the idea of waiting for the flush, the idea of not getting a flush, but getting a reversal coming in. These stories, it's not always going to be exactly as you planned. It's not always going to be the perfect trade idea, but it's going to have elements together with your value stories that's going to be able to allow you to build that narrative. And that's what's important, is building the narrative. If you can't build a narrative, you ain't got feck all in terms of trading, have you? You know what you know, and if you don't know, guys, guess what? You don't fecking know, do you? Anyway, where did the buy come from? I'm curious. Who knows where the buy came from, guys, on the NASDAQ? Melvin. Q Melvin. Who knows where the buy came from on the NASDAQ? Cheers, Rave. Get my man on the screen. Who knows where the buy came from on the NASDAQ? Yeah, I was looking a little bit more information, perhaps, than just the price of $4.90. Just a little bit more information. Well, you'll see from last night, we had a dealer's key at $4.90, didn't we? And where was the other dealer's key? $6.50 to $4.90 was the two dealers' keys, right? $6.50 to $4.90 was our dealer key from last night. What price did the NASDAQ trade from? I know it was above it, $6.80, but that's okay. That doesn't make any difference. So if I'm looking at the dealer keys and I draw in $6.50 area there, and I draw in $4.90 area there, Is that not interesting that the price went from the dealer's key directly to the dealer's key? Sure. Remember what we said yesterday about the price holding above 650 for a buy trade yesterday? If you don't, we tweeted it out, so you would definitely know we said that if a hold above 650 would be a buy trade. So if we know that that's already on our charts, if we've already done the work on this, it's not really particularly surprising, is it? Is it? I don't think it is. I don't think it's really surprising at all. I think the fact that we talked about that 650 level on the NASDAQ yesterday at 1:54 in the afternoon was pretty important, right? 1:54 London. It wouldn't have passed you by that the sellers came off the dealer's key at 26.50, right? That was one of our dealer key levels from the day before as well, wasn't it? So obviously that 26.50, we then pay very, very close attention to. And obviously again here, okay, this is yesterday at 3:41. You'll have noticed that the room call long, because we talked about this in the room. I said in the room, what did I say? If the price holds 26.50 bid, the price is going to go up from here. Did we not say that yesterday? Well, that was worth $1,000 as well. Well, the 26.50 has been mentioned so often that hopefully today you haven't forgotten about it. Because today the 26.50 has been dominating our landscape in the background here. And obviously we've ran it once with that exhaustion print, market maker dominating the top edge. And then they've just held it offered here, lower held offer here for the sell off to the next dealer key here. Dealer key to dealer key was worth $3,200, wasn't it? 160 points on the NASDAQ. Dealer key to dealer key, guys, $3,200 per contract, Melvin. I think that's pretty good. I think that's a pretty good outcome. And again, we're not saying the dealer key is a sell. We're not saying this dealer key is a buy. What we're saying is you know that it's there. You know that the price trades between dealer keys and dealer keys. It goes from dealer key to dealer key. Why? Because dealer key is a level where we can anticipate, massively anticipate, a big arrival of volumes. Why? Because the dealers are going to hedge or defend those price levels. They've got to do one or other. They can't not do anything. They've got to do something. If they're going to hedge it, the price will sail through the level and will be sell side from the retest. If they're going to defend the level, the price will bounce off the level and it'll hold. They decided to defend this level. There was no buyers coming in here, so it was pretty obvious that that was what they were going to do, right? And there was no sellers coming in here, so it was pretty obvious that that's what they were going to do, right? So in other words, we know what they're going to do when they hit the dealer key level. I didn't know it here, but they flushed them. They went for the flush here, didn't they? They went for that final flush here. And then when that switches off, of course, the dealer's got an easy job of defending the 500. I would have loved them to run the stops at the bottom edge. They just didn't bother because the market maker was in charge of the buy side here. And if the market maker's in charge of the buy side, that means that the algorithms are not selling it. If the algorithms aren't selling it, we start looking for that as a buy side bounce. We're not going to get the bottom edge at that stage, and it's going to rally away from that price. Crazy good stuff happening in those areas, isn't there? Crazy good stuff. So that's what we're doing as traders. Theo got the second retest at 500. Brilliant. Hopefully you took profits out here at 550 and then bought back in at 510s. You know, and rode the narrative here, rode on top of the narrative. Good trade, lovely outcome. But guys, it's never going to be photo perfect. I should know this because I keep looking at pictures and, you know, of girls and, you know, and I think to myself, she looks really pretty. And when I meet her in person, she looks nothing like her photo. So when it comes down to photo perfect, you very rarely see it, right? All these dates that you go on and it's, yeah, there she is. Oh my God, that's not her, is it? So I'm sure she says, sure she says the same of me, because I mean, I've had Chris Hemsworth as my picture for a long time. You know what I mean? So I'm talking about dating sites, Alan. My God, have you never been on a dating site where you get a picture? They're never the same. I don't think there's anything creepy about that at all. That's just your weird mind thinking it's creepy. Aye, you're found out, aren't you? Anyway, so sell side, top edge, buy side, bottom edge, crazy beautiful stuff, and crazy beautiful stuff going on, and some great trades. Now, I don't know if anybody's got any more on that bit of gold business. It's been sell side top edges. We started to see a bit of an accumulation, but it's not held the offer at the moment. So it's struggling to stay offered at this point. I was a little bit surprised. We've got a fast money or sell rejection coming away from gold. But obviously, with the equities starting to catch back on the bid again here, it's been a little bit troublesome. Let's take another little detour into bonds for a second. And bonds has been a problem child today for us. I'm sure you could probably agree with me on that one. The sell for the data was easy. That was probably the easiest trade of the day. It was a prior swing high. We'd already sold this price before, and then when the data came out, we got the big splash to the downside. What I was hoping for was a retested low price here to buy into 2016s, 2616s. Never happened. Price rocketed back up to the top edge. When the price rocketed, the absolutes are very, very bullish treasuries. So obviously, if the absolutes are very bullish, and then we look at the FOB spread, and the FOB spread is very bearish, then that looks like a non-starter for me. So in other words, we're forecasting a sell trade by the back end, and we're trading at the front end buy side. So that means we've got to be very passive if we're going to sell this again at the top edges. Remember, we've got the forecast and we've got the actual. This here, see this? That's a forecast, not the actual, right? That line is forecasting. If it's going up, it's forecasting bonds are going down. This is the actual here. So with the absolutes, when the absolutes are gapping down here, you're expecting bonds to take out the prior high. The 2s, 10s look as if they're a little bit rich to the curve at the moment, which is suggesting a bit of buy side pressure coming in here. Well, you got a little bit of buy side pressure coming back in, didn't you? So what's happening is we've got a little bit of a difference of opinion, but now we see inflation coming in on the sell side of bonds. We can start to think about the possibility that if we retested back into 2760s to 2708s, we might just get that trade on and see if we can get a little bit of sell side business, kicking off into the top edges. But I don't see a trade at the moment, guys. I think that's possibly a trade on bonds up here. But at the moment, it's not for me. I don't know if anybody else has got a different opinion. I haven't seen Jason for a while. So I don't know if anybody's trading treasuries right now, but that's certainly where I'm going to be thinking about getting back into treasuries if everything stacks up. If the FOB spread is still predicting a drop and we start seeing this change taking place here, I want to see, obviously if we're going to sell this, I want to see the absolute rate curve rising here. Well, the absolute rate curve is rising. So that's good news, right? That's good news. That's going to get us short. But I need to get that higher price if I'm going to sell it. Okay, it's as simple as that. So how's our oil doing? We talked about oil in terms of value narratives. Let's take a swatcheroo. And we can see how oil is doing. It's doing pretty good, thank you very much. The value finally came bullish at that point. Remember, we talked about it at 80.40. It retested 80.40s here. Good opportunity to buy some more. If you had managed to make some money on the first swing, or if you'd missed the first swing, a great opportunity to join in. And I think the buy value has pretty much stayed in play for the entire move so far. So I quite like that storyline on oil. Everybody agree? Nobody agree? Nobody gives a buy side value on oil? Yeah, we all agree, Reeve. Good stuff. Reeve speaking for all of you. Thank you very much, Reeve. And, obviously we've had a couple of nice retests in here. We got a little spring trade in this last little retest here. And what are you looking for in these retests? Well, you're either looking for a total exhaustion or you're looking for an absorption, aren't you? You're looking for something on the tape that gives me a story. Let's take a look at the story. I want to tell you a story of the top line, guys. So let's take a look at it from this point onwards at 1400 hours. Let's see if we can start spotting some of these. Now, remember, this is a 5-minute chart, so there's a lot of stuff in this chart, right? So it starts off with a buy trade at 1400 hours. Let's take a look at the tape story. Remember the tape story? You remember that thing we need to do when we're trading is look at the tape? Well, let's take a look at the bottom edge. Remember that bottom edge here? Look at that, guys. Is that not crazy? Well, we talked about it before at 35s. Look at it. Look at it. You can't not see that, right? It's impossible not to see that storyline right there. It's impossible not to see it. So when you get that bottom edge, it's not like it's at lower prices. It's the same bloody price. And obviously that's at the same time as we're now recognizing that bottom line price coming out to play here. So obviously we're ready to rock and roll. We're kicking off big style here. 1345, 1350, 1355, 1400 hours. Oil cash open. Boom, we're ready to go. They buy the cash open here. They buy the cash open right there. Do you get it? So they took the price down for the NYMEX open, didn't they? Yeah? They took the price down for the NYMEX open. They ran it down to get into the long position at the bottom lines. So let's see some of these retests. So let's take a look and see if what kind of tape we get in the retest. There's a buyer there. So there's a buyer away up here. So we obviously want to mark that guy and make sure we're aware of the fact that there's a buyer there. It doesn't look like a great price, but it's still, you're still acknowledging that there's a buyer at that price. Now, you know, if you can get into a price in that area, that would be pretty good to buy into. There's another buyer at almost the same price. So that looks interesting. Now, the only challenge you've got is there's a seller there and there's a seller there. So that's bad news at that stage, bad news for that trade, right? It's bad news. Buyers come back in again at lower prices. Good. Why did they do that? Well, because there's a seller there. They're giving themselves a bit of space, aren't they? So if we just mark off the seller there, these guys here are giving themselves about 10 ticks of space to buy into, aren't they? Just in case the seller reemerges at that price. So we recognize the buyer again coming in here. There they are there. There's the buyer. And there's another buyer where the seller once was. Change of behavior right there, isn't it? So we got a change of behavior. The seller that was there probably tried to sell again, and the buyers absorbed all of that selling, and they've taken the market bid right off of that 80-60, didn't they? And that's where you've taken the price to, is that big pop to the upside at that stage. See it? So as soon as that seller that came in there and there, as soon as that guy took that seller on there, this was gone. Buy side only. You see how you build that story again just by reading the tape? You build the story again, and that price, of course, became very important to us. 80.65. So when we saw that 80.65 print in there, that hold above that became very, very important for the successful swing away from that price point. And again, it's not about one single piece of the jigsaw puzzle. This is where retail traders collapse into a puddle. They want a trade setup, just a trade setup. But then they always rebel when they suddenly find out that they've got to do a little bit of work to figure out what the order flow is around the trade setup. They don't want to know what the order flow is. They just want to know it's a buy trade. It's never going to be that easy, guys, because there's always going to be a qualifier. There's always going to be a reason that might not take the trade. And if you pass up on that incredible reason, you just become a systematic trader, you're going to become the same as pretty much every other retail trader, and that is a losing trader. If I'm using the wrong order flow narrative, if I'm trying to buy when everybody's long, I'm going to lose money. If I try to sell when everybody's short, I'll lose money. So you've got to know what the order flow is telling us. You can't shortcut that process. So the buy value might be massive. I don't really care unless we obviously have a sell trade, in which case we know exactly what to look for, that absorption and then the sell lean. We'll take the lean and we'll go sell side. This is how you make easier money, guys. You get the full storyline and you just join in with the party. So you're joining in with that party. The buy side value is very good. We're starting to roll beautifully to the buy side now. And as we mentioned, you can see that the blue line at the bottom edge is very clearly giving us a lot of buy side value for the entire move higher here. And that's great news. That's allowed us to take a little pop from 40s to 10s for $700 profit, guys. That is crazy good business. Let's take a look at what Max told us about the bottom edge here. Let's take a little goosey at the Max bottom edge print. So what happened at the bottom edge? There's the flush. Can you see it? It's almost the perfect bottom edge. Does everybody see the flush? So did we get a pin? Did we turn this into a Viper at any stage, guys? Well, we would imagine the flush is the Viper trade. Does anybody see any volume? When there's a flush, did anybody see volume for the flush? Oh, there it is right there, isn't it? That's the big volume candle for the flush. So this becomes a V-pin price, doesn't it? We told you this yesterday. This becomes a V-pin price with the flush already intact. So the only thing that was missing at that stage was the market maker running into a quick buy side trade, but the buy finally happened over here, didn't it? So I know it's not in exactly the location we would have liked to have seen it in here. We'd like to have seen it in here, and you might look at that and say, well, maybe the market maker was still thinking that there was a lot of sellers in here. Maybe the market maker thought we were going to get another retest at 80 evens. That would be reasonable to think, wouldn't it? We got very close to 80 evens, 80.25 traded. So maybe at that stage there, the reason why we've got this storyline here is the market maker thought we were going to try and run 80 evens as a sweep and then go bid. But obviously when they noticed that in this area here, they noticed that there wasn't any sellers left. The market maker flipped into a buy trade here. Do you see it? So the market maker flipped into a buy trade there, and obviously that gave you the perfect buy trade at that stage. That, in essence, is our pit Viper trade right there, isn't it? That's our pit Viper there. And you might say, is it? Well, it depends how you define it, isn't it? If that's the way you want to define that trade as a storyline, then the answer is yes, that is exactly what we showed yesterday. It's a little bit later than we showed it. It's a little bit higher away from the V-pin trade level, but it is still a Viper pit trade. It is still a Viper pit trade. It's still that storyline. And that's when it starts to show up as a little spring trade, and boom, that one trade on its own was worth $550 profit in just approximately 6 or 7 minutes. And obviously we've had big volume into a pin zone. So what is that? That's a V-pin. It's not a sell. Quite clearly it's not a sell, but it is a V-pin. So what do you do when you hit a V-pin, guys? You book some monies. That is a V-pin trade. You book some monies. You draw a line, because that is a V-pin trade. It's not necessarily a sell trade, but if you're long, you're going to use that as a bit of profit taking. Yeah, do not hold on to a trade. Take some of your monies if you're a multi-lot trader. Make sense? Makes sense, guys. I noticed we're just coming into classroom, actually, so we're going to take a little 5-minute break. I do have a triple macchiato with my name on it waiting somewhere, so I'm going to grab that and then we'll get started.